Welcome back. I'm Pratap here. Today is the 12th March 2025. In this video, let us evaluate the performance of high liquidity zones generated in our previous end of the day report. Even before that, please note we are providing complete free training on supply demand zone price action. And you might be knowing it is a highly expensive training course, but we are providing complete free training and all the training lessons are already available at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community in place of Post. So click on the Community tab. Then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. I kept all the training lessons in this playlist. And you need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one according to my training instructions provided at our Telegram channel. I provided the link to our Telegram channel in this video description. So join at our Telegram channel. At the top of the window, you can find pinned messages. Click on the pinned messages. There you can find all the training instructions. So learn this course according to those training instructions. Then definitely you will become a very good independent trader in the coming months. So please make use of this opportunity. Now let's get into analysis of the high liquidity zones from the previous report. Okay, last report we identified 1, 2, 3, 4, 5, 6, 7 high liquidity zones. And none of the trades we got today. And one fine-tuned zone is violated, and that we already predicted on 10th March HLQ analysis video. That is for Tata Motors. As per lesson 16 concept, I explained in that video, you should not plan any trade in that because that will be violated. There are higher chances zone will be violated. Except that we did not get any trades, but the only excellent intraday opportunity you might have gone from Nifty and Bank Nifty supply demand zone chain reports. Look into the Nifty. We have two high liquidity zones, 5 minutes high liquidity zones. This is the nearest 5 minutes high liquidity supply zone in Nifty chart, and this is the nearest high liquidity demand zone from Nifty chart. And today we got the trade from this 5 minute zone. So around at 12:45 prices entered here, then they were moving, and finally it gave you 1:5 RR. Maybe some of you might have exited earlier, but a maximum 1:5 RR it has given. And during this process, none of the 5 minutes zones are violated. No zone, no 5 minute zone is, demand zone. No 5 minutes demand zone is violated. If you would have used 5 minutes demand zone, you would have captured the whole move until 1:5 RR. And at 1:5 RR, there is a demand zone violated almost at the closing hours of the market. If anybody used trailing stop, 5 minutes trailing, probably here you would have exited, or 1:5 RR, mostly we would have exited. That way captured the maximum profit. Either way would have happened. See here, we have a rally, base rally. Prices came, picked up the orders, and again it moved up. Now again here you have a rally, base rally. Again prices came here, picked up the orders, and again moved. And again here rally, base rally. And here probably this is the one would have been stopped out at 3:15. But before that, probably at 3 o'clock, 5 minutes, you might have booked your profit because at the time it reached 1:5 RR. Some of you might have booked your profit at 1:3 RR, somewhere here. 1:3 RR it achieved. Maybe some of you might have booked your profit here. You have different options are there. So what is this 5 minutes high liquidity demand zone? When it was created? This is according to our supply demand zone chain, Nifty supply demand zone chain report in our everyday HLQ premium video reports you can find. See, this is the failed ERC candle, then drop candle, base candle and a rally candle. So this is the way our software identified this zone. This is a drop candle till here. Okay. So it's already, this is identified as a high liquidity, previously tested once, and today tested twice. Either you take the trade here or here, and finally it reached 1:5 RR. Maybe earlier prices reached more deep inside. Maybe some of you might be thinking this zone might be violated, that fear might be there. That with that fear, if anybody avoided this trade, see, you got another opportunity here. See, LOTL zone is created, drop base rally. This is a confirmation, a new order flow is again added here. Now definitely you can take a trade, because already again a new drop base rally, LOTL zone. In this zone you can take a trade. Not only that, even now also they created again another drop base rally. Maybe next time it may give you one more trade opportunity. That means when prices are reaching here, institutions are adding more and more order flows in this zone. This is what you should observe. Today twice they added new order flows here. And moreover, the second time, none of the 5 minute zones are violated. That is a very interesting observation from today. That's why maximum profit you would have captured today. What is the maximum opportunity till this 1:5 RR level? What is Nifty has given? Let us see, it is over 150 points move it gave. Let us see what is the overall profit Nifty could have given you. You might be asking why we should focus on Nifty. Because today none of the HLQs, other HLQ zone trades we got. The only hope you might have got a trade is from the Nifty. Okay, I'm talking about intraday point of view, intraday HLQ zones point of view. Oh, something wrong. Our profit level 22,492 minus our entry 22,337. The difference 154.7. So nearly 155 points move it gave you. What is the Nifty margin cost? 75 is it lot size. Let's open the margin calculator. Let me go to Nifty. So I'm selecting Nifty March futures, not considering weekly futures, March end futures. So lot size is 75. So into 75, you would have got 11,600 rupees profit. Excellent, right? Okay, into 100 divided by, what is the cost? 1,91,218. That is at the time of closing. At the time of closing, the prices are here, closed here. But you took entry here. See, when prices are moving, what happens? Your margin cost will be increasing. When prices are moving down, your margin cost will be reduced. So probably by the time when you take the trade here, the margin cost would be definitely less than maybe another 500 or 600 or maybe 1,000 rupees. Difference might be there. So let me say we have around 1,90,500 rupees. Let us say the margin cost at that time, because it is almost close to 2 lakhs worth margin. So definitely considerable move will be there, price difference. So I am giving 1 lakh approximately. I am specifying 1,90,500. 6.0. That means 6.1% ROI you would have captured. Not, return on the investment based on one future's margin cost. Approximately. See, these are the approximate values. This is an excellent trade, right? And who gave you this trade opportunity? Our NeoStock Nifty supply demand zone chain. This is the nearest high liquidity demand zone, and this is the nearest high liquidity supply zone. Because we have confidence that most of the high liquidity zones might be having higher success rate. So that way, this is how we are planning the trades, especially the Nifty and Bank Nifty traders. They analyze the stocks based on the high liquidity zones. Whenever prices are entering into the high liquidity zones, they will be planning the trades. This is the way Nifty, Bank Nifty traders are getting profit by using this. We have some premium subscribers. They only use Nifty, Bank Nifty. There are around 2 users. They use only Nifty only. Even they don't use Bank Nifty. There is one user uses only Bank Nifty. Some people will use both Nifty, Bank Nifty. Some professional traders are also there. They've been trading for the last 1 year with us. They are using all the reports, HLQ zones, Nifty, Bank Nifty. They use bullish and bearish trade setups. Wherever the opportunities they are finding, they are making use of them. Even the latest strategies they land, probably they might be using them also, like Pearson zone strategies. We have different types of traders, but what I want all you people should get familiar with all these opportunities. See, every time you won't get opportunity in a single stock. You may get opportunities in multiple stocks. Every time you may not get opportunity in a single strategy. You may get opportunities in different strategies. So wherever you get the opportunity, you should make use of that. I agree, HLQ zone strategy, at least within a month, out of 21 trading sessions, at least 16 trading sessions or 17 trading sessions, you will get trades. Either success or failure, whatever it is, you get trades. Hardly few days, maybe 2 days or 3 days a maximum, or 4 days, you won't get any trades. Maybe today is such kind of day. None of the HLQ zones are executed. Only one is executed, that is violated, and we expected that will be violated. So what is that? Tata Motors. If you look into 10th March HLQ analysis video, I have explained Tata Motors how to fine tune. In that video, I clearly told you, in case if you did not listen, please go to 10th March and listen the video. The Tata Motors, when I explained, when I fine tuned, I told you don't plan any trade because this will be violated. How I told? As per the lesson you learned in lesson 16. Lesson 16 you learned when a zone can be violated. See, Tata Motors, today the fine-tuned 5-minute zone is violated. And we know that this will be violated on 10th March itself while analyzing this stock. That's why in the video, because even I cross-checked, I again went and cross-checked in the video. Clearly, I mentioned in that video, don't plan. I'm not explaining how to fine-tune this zone because already we discussed in that video. Why I told don't plan? Because this zone is already tested. This drop-based drop follow-through candles, it's already tested. Because it is already tested, I told there are higher chances this zone will be violated. The whole zone, the higher chances. Why? Because there are no other fine-tuned zones are available inside this. See, today it is violated. This zone, even the 75, everything. Go to the 75 minutes. 75 minutes candle is also closed. It is not a pierced zone. So everything is gone. Okay, now you can ask a question. Is this zone is going to be violated maybe tomorrow or day after tomorrow? There are higher chances, provide one condition it may not be. Maybe let us assume tomorrow morning 9:15 candle, let us assume there is a drop candle is created. Now what will happen? A new order flow institutions added. Already see here. Rally candle is there, medium size candle. You have a base candle. Let us assume tomorrow there is a drop candle. What happens? Now your new analysis will be inside this zone. Let me delete this because this already we discussed and violated. Let us look into this stock, a fresh stock. There is a possibility. We have two possibilities. First possibility is, of course, the third possibility is also there. But before that, this is a 75 minutes supply zone created tomorrow. When if a drop candle is created, then only. Let us assume a drop candle is going to be created tomorrow. If that is the case, will there be any order flow inside? Go to the 15 minutes time frame. See here we have a failed ERC candle. Definitely this is not a base candle, maybe it is not a leg candle also. It is depending either way you can consider. This is a leg in, this is a base. Let us assume tomorrow a drop candle is created. Now what will happen? Here you get a 15 minute zone. Inside this 15, go to the 5 minutes time frame. See, you have an excellent rally candle. You have two base candles. Let us assume tomorrow drop candle is created. Immediately what will happen? Here a new fine-tuned 5 minute zone will be created. Like this you might be having a fine-tuned 5 minute zone. Maybe this is a 15 minutes fine-tuned 5 minute zone. See, without base candle, we are analyzing this chart. Without a leg out candle, we are analyzing this chart. Assuming if tomorrow, if a drop candle is created, and that drop candle may be valid for 75 minute zone, then also it could be valid for 15 minutes and also it could be valid for 5 minute zone. If everything happens tomorrow, then next retracement you can plan the trade. Except that one situation, remaining all the situations, there are higher chances this zone will be violated. Let us assume tomorrow, instead of drop candle, a rally candle is created and there are no further order flows in this zone, Tata Motors will be easily violated. This is how you should foresee what is going to happen in this zone. So that's why we are saying 80% scenarios we are in a position to tell when a zone can be violated. Remaining 20%, these scenarios. If a new dynamic zones, dynamic means in the next trading session, live market, new zones are created in the retracement either on the same day or maybe after 1 week or maybe after 1 year. Anything again when prices reaches here the order flows will be pushing the market, pushing the prices again down. That way Tata Motors might be giving you a new trade opportunity. But as of now, the zone is not completed. Is it going to be a drop or is it going to be a rally? How can we say? That is all depending on tomorrow's demand and supply. Can you predict what could be tomorrow's demand and supply? We can't predict unless that happens. If tomorrow demand is stronger than the supply, what will happen? Rally-based rally will be created. And with that rally-based rally, remaining order flows in this zone will be violated. Finally, this zone will be violated. That way we can say perfectly we identified as per our lesson 16 concept, this zone is violated. Suppose tomorrow a rally-based drop took place, then what we will say? The remaining 20% scenarios, new order flows are created, institutions, that's why this zone is not violated. Because it is not violated because of the new order flow, what we can say? In the next retracement, we get the trade opportunities. That's why whether this zone has to be violated or not, it is all depending on the hands of the institutions. It is how they think. But of course, there is a fight between institutions and institutions. One institution might be a bull, another institution could be a bear. Or I can say a set of multiple institutions together can be a bull, and another set of multiple institutions could be a bear. Depending on their demand and supply on tomorrow's market, the future of this particular zone will be depending. But 80% scenarios, we can say the zone can be violated because there are no existing order flows are available. Remaining 20% scenarios, it's all how institutions are thinking tomorrow, whether demand is dominating or supply is dominating. But drawing this zone is meaningful? No, it is not meaningful, because we never know this is going to be a rally candle or it is going to be a drop candle. We never know. But at present, a setup is prepared already. A setup is prepared here. We have a rally candle. You have two base candles. So balance is taking place. Only question is, only remaining thing is imbalance should take place. And third option is also there. What is that? Lot of consolidation will take place here. Prices will be moving along. And finally, prices will either go up or go down. In either situation, that lot of consolidation we can't consider as a zone. Next time the zone will be violated. If not tomorrow. That possibility is also there. Anyway, I am deleting this analysis. This is only for discussion, but remember, some interesting activity is taking place. So learners, it is a very interesting area to focus what is happening on tomorrow in Tata Motors. Okay, except this, anyway, we predicted this zone will be violated on 10th March analysis itself. And remaining, we didn't get any trade opportunities. Let us look into them one by one. First one is Laurus Labs. This is a daily high liquidity supply zone. However, software identified as a drop, two base candles and a drop. This is how our software identified this zone. And this one, again, we fine-tuned with 75 minutes time frame. So here we have a rally, two base candles and a drop candle. Again drop, base, drop. Some of you may not be convinced this is not a great leg out. Okay, fine. Sometimes we can compromise and draw the zones. I told you earlier. That way this is okay. And this 75 minute zones I fine-tuned with 15 minutes time frame. See here 15 minute structure is not really a convincing structure because of this candle, a large candle, maybe a failed ERC, such a big candle and another drop candle, in between no base candles. That's why I don't have any interest on this area, because there are higher chances this zone will be violated. Okay, but what about here? Here you have two institutional order flows. See, drop, base, drop, 15 minute zone. But it is tested. Okay, that we will see later after going to the 5 minutes. And here again a drop, two base candles and a drop. Okay, now go to the 5 minutes time frame. In the 5 minutes, see 5 minutes here also, now more clarity you see how bad this structure. Drop candle, no base candles in between and some sort of consolidation earlier. And it is a failed ERC candle. Anyway, here you see, you have a drop, base, drop. This is a fine-tuned 5 minute zone. And also here you have a rally, base, drop. And this is already tested. So there are higher chances this will be violated. The only hope is on this area, this drop, base, drop. That's it. So this is about Laurus Labs, but today anyway prices did not. I think last hour just reached here at 15 hours. But anyway, no order flows here. Next one is Marico. This is also a daily high liquidity supply zone. how we identified, software identified. See, very interesting here. See, it is a rally candle, base candle. This is looking like a rally candle, but it is considered as part of the base because according to the software, it is a medium size candle. Software recognized this as a medium size candle. Software recognized this as a small candle. That's why this is a drop candle. This is a large candle software. A small candle by default is a base candle. And medium size, earlier base candles are there, medium size candle also can be kept in the base. So that's why software identified this is a rally, two base candles and a drop candle. But actually what we do, we ignore such kind of zones. But software identified, and moreover it identified it as a high liquidity zone. So that's why previously it is tested and came down. Okay, but HLQ zone strategy point of view, we need fine-tuned 5-minute zones. So that's why go to the 75 minutes time frame. Here you have a 75-minute zone. How? See this failed ERC, a big candle. See this big candle. You are seeing this big candle, right? That is a failed ERC as a leg-in. Then you have 1, 2, 3, 4 base candles and then a drop candle. This is how identified the 75-minute zone as a rally, 4 base candles and a drop candle. So this is the 15-minute zone. Within the, 75 minutes zone. Within this 75, identified a 15-minute zone. Go to the 15 minutes time frame. See here you have a rally, 2 base candles and a drop candle. Rally, base, drop. Okay, this is the 15-minute zone. Now go to the 5 minutes time frame. Five minutes time frame, it looks like a rally, base, drop, right? But again, prices, next candle it picked up, went more deep and came down. That's why if you draw a zone, rally, base, drop, we can't use this zone. But for me, these rejections, see how I am thinking, please understand. See, this analysis is done anyway. Market did not enter into this zone. But how I analyzed this stock, this is how you should understand. See, I am seeing a rejections in this area. I thought maybe some horizon might be available. See how my mind is thinking. By seeing these candles, okay, this is a rally base drop, maybe an horizon might be having, this is the area. Maybe this horizon could be a LOTL area. So the main source is there above these candles. That way I thought, then I went back and finally here I identified a zone, a 5-minute zone. We have a drop candle, you have 1, 2, 3, 4 base candles and a drop candle. Drop, base, drop. And this is the horizon. Of course, I have drawn week to week, but while planning, you will manage, you will fine tune the entry and then you plan. Intraday point of view, you can't take this whole area as your trade. Maybe risk could be beyond 2%. You already know how to fine tune the entries to manage the risk. Several videos we discussed how to fine tune the entries. I think in the recent lesson 29 also I explained this point again. In the training videos also. In the existing one of the videos in lesson 29 series. See, this zone is working. See here again rally, base, drop. If you consider this as a small candle, then only it is a base. Otherwise it is a medium size candle. But definitely here drop, 2 base candles and a drop. Here in this area. Drop, 2 base candles, a drop. A new order flow is added. Again you see here rally, base, drop, new order flow is added. That means this is actually a high liquidity area. Already tested several times this zone. That way also we confirm this could be a high liquidity zone. We are saying could be 80% scenarios because 100% accuracy software can identify. We 80% accurate level based on multi-testing or based on LOTL scenarios. We can predict. We can't confirm, we can predict. So that way we are assuming. But moreover, this zone is a lower time frame, not LOTL, sorry, lower time frame horizon to the higher time frame zone. Lesson 22 concept. Such kind of zones will be having strong institutional order flows. See, from here it picked up the orders and sharply it came down and entire leg out formation is completed. Who is the origin? This 5-minute zone. So that is the reason why I have drawn this 5-minute zone. See, anyway, if there is no 5-minute zone, this rally based drop, it is already tested in this candle, you may not be taking the trade if you consider. But now we are not considering this rally based drop, we are considering the origin. Might be having a strong institutional order flow. So that's why our trade plan is from this origin. So that's why it is still valid, we can plan, but today prices did not enter into this zone. We did not get any trades in today's candles. Tata Communication, Tata Motors we already discussed. And the next one is Hindalco. Hindalco is a 75 minutes high liquidity zone. This zone is created when November 6th, 2024. We have a leg in, you have a base, you have a drop with hidden body or pro gap. This was the high liquidity zone created. And recently, few days back, prices entered into this zone when on 10th, Monday. At the time, institutions created a new order flow and pushed the market down. Go to 15 minutes time frame. See here, rally base drop. A new zone is created. Now we are thinking whether similar thing will happen tomorrow in Tata Motors. That is what we discussed. Actually, this zone is supposed to be violated. It doesn't have any proper order flow in at the time of the zone creation. But last Monday, institutions created a new order flow, rally-based drop. And this 15-minute zone, again you have a fine-tuned 5-minute zone. Look into this 15 minutes area. You have a drop-based drop. So this is the area we are planning our trade. But today prices did not enter into that area. So that's why we didn't get any trade opportunity. Next, JSL. This is also a 75 minutes high liquidity zone. And JSL is having two order flows, 15 minutes order flows. Before that, let us look into how this our software identified this. What kind of zone it is. So this is a failed ERC as a rally, two base candles and a drop candle. This is how our software identified based on the dynamic views. Okay. And this zone is fine-tuned with 15 minutes. Here we have a rally candle, 1, 2, 3, 4 and 5 base candles and a drop candle. Rally base drop. This is how this 15 minutes zone we have drawn. And one more zone, you see here you have a rally, two base candles and a drop candle. This 15-minute zone is overlapped at the distal line of the 75-minute zone. That means this is the lower time frame horizon. That is 15 minutes horizon to this 75 minutes high liquidity zone. Of course, this is also fine-tuned zone, but overlapped at the distal line. And when overlapped at the distal line, a part is outside, part is inside, then we are considering that as a horizon. So 15 minutes horizon. But 15 minutes horizon, you can't plan the trades. So you need to have a fine-tuned 5-minute zone. Otherwise, the horizon will be violated. Okay, that's why we should fine-tune both. And look into 5 minutes time frame. See the 5 minutes, here the structure is not good. I am not convinced with any 5-minute zone here. That means this area will be violated. It has a leg out, but so many base candles. so many base candles, the zone will be violated. But what about the horizon? The 15 minutes horizon is having again a rally base drop. So this is the way 5-minute zone is created. And this 5-minute zone, fine-tuned 5-minute zone is also horizon, because from the horizon only it picked up. Last time when it picked up, see, rally base drop with pro gap. Rally base drop is created. That means again new orders are added into this area. So our trade plan is from this horizon, but today prices did not enter. Next one is Jubilant Food. Jubilant Food is 75-minute zone. I am not convinced with the price structure inside the zone, so I didn't fine tune. Don't have any interest. Why? Look into 15 minutes. You will also understand. See here, so many candles and drop candle. Such kind of zones will be violated. Okay. And the next one is Shenzhen. This is also a 75 minutes. And this is also I didn't fine tune. This structure also I am not happy. But how our software identified? Drop 1, 2, 3, 4 base candles and a drop candle. But inside the structure is not good. Go to 15 minutes. Here also recent price action also there are no. See, even today prices entered inside. Why it came down, you may say. Morning 1 minute candle you see prices entered and sharply came down. See, sharply came down. Opened, moved up, came down. Why it moved so sharply? Maybe there could be a freak trade. Maybe a false trade might have executed. That's why it is showing a wick and again came down. Sometimes it happens in exchange, but we have to live with that. But anyway, this zone is not having any proper 15 minutes order flows also. Here also there is no proper 15 minutes order flows. We have a rally, 2 base, but this is a medium size candle. You can't consider this as a leg out. And here also you see you have a rally candle, you have a drop candle, in between no base candles. So structure is not good inside this zone. So that's why I didn't plan any trade in both these stocks. That means I did not fine tune the zones. Okay, this is about the HLQ zones identified from our previous report. Hope this analysis will be helpful to you. Let's all meet again in our next video. Thank you.